All right, so um, we're going to try to figure out what Warren Buffett's been up to.
Okay.
He's one of the most successful investors ever, and everyone always wants to know what he's doing.
Right.
So in 2024, he's been making some moves.
Yeah, he has.
And you sent over this really interesting article from the Motley Fool,
Mm-hmm.
and it says that he sold like $133 billion worth of stock.
Yeah, that's a crazy number.
There's a lot of money.
Even for him.
Yeah, even for Warren Buffett, that's a ton of money.
So we got to figure out, like, what's going on there.
Why is he doing that?
Yeah, is this just him rebalancing, or?
Yeah, or is this something bigger?
Is this like a statement?
Yeah, is he trying to tell us something?
Right.
So how do we even start to unpack this?
Well, I think to understand it, we have to look at what's happening in the market,
Okay.
the S&P 500,
Right.
which is kind of like it's like a benchmark for the whole stock market.
Uh-huh.
It's currently trading at a price to earnings ratio of 30.
Okay, so what does that even mean?
So basically, that means that for every dollar of earnings that companies in the index generate, investors are paying $30.
Okay.
So that's kind of high historically.
So it sounds like maybe the market's a little...
Overvalued. Yeah. Pricey.
Things are a bit pricey.
So maybe that's why Buffett's selling so much.
It could be, it's possible that he's seeing this and he's thinking like, okay, things are getting a little too expensive.
Yeah.
Time to be a little cautious.
So is he just selling like across the board, or is he...
Well, he's not just selling randomly.
Okay.
He's actually reduced his stakes in a couple of really big companies.
Okay, which ones?
Apple
Wow.
and Bank of America.
Wow. So those are two,
Huge companies.
yeah, giants in their industries.
Absolutely.
So if he's selling off those huge companies, then what is he holding on to?
Right. That's the big question.
Yeah.
What does he what does he see?
Yeah.
That's the interesting part.
Yeah, what's catching his eye?
Amidst all this selling, there are two companies that he's holding on to.
Coca-Cola and American Express.
And he's had these for a while, right? Decades.
Yeah, he's been holding on to these for a long time.
So everyone else is kind of like running around.
I'm sticking with these. I like these companies.
It's like he's doubling down on a certain type of company in this weird environment.
Yeah, that's a good observation.
So let's start with Coca-Cola.
Okay.
It seems like his history with Coke is kind of legendary.
It really is.
Could you tell me about that?
Yeah, so he first bought into Coca-Cola back in 1988,
Okay.
right after that Black Monday crash.
Oh, wow.
And Coke was trading at a discount,
Okay.
so he saw an opportunity there.
Yeah.
And he hasn't sold a single share since.
That's amazing.
It really is.
But, Coke isn't exactly what it used to be.
No, it's not like the high growth.
No, it's not like some crazy tech company.
Exactly.
Yeah, so why is he still so into it?
Well, it's true that it's not this, high growth stock anymore, but it offers something else.
What's that?
Stability
Okay.
and consistent performance.
Okay.
They still have a huge market share.
Okay.
Their sales are steady, and they have a dividend yield of 3.14%.
Okay, so what does dividend yield mean for someone who doesn't follow the markets that closely?
So basically imagine you own a little piece of Coke,
Okay.
a share.
Mm-hmm.
That dividend yield means that you get 3.14% of your investment back every year,
Oh.
just for holding the stock.
Oh, so it's like a bonus.
Yeah, it's like a little bonus that they pay you regularly.
So even if the price of the stock isn't going up and down a lot, you're still getting paid.
Exactly. You're still getting that steady stream of income.
That's cool.
And in a market that could be volatile,
Yeah.
that can be really attractive to people.
Yeah.
Especially
someone like Buffett who thinks so long term.
Exactly. He's thinking decades ahead.
Yeah.
So that steady return is really valuable to him.
So it's not just about dividends, though, right?
Right.
There's something else going on with his strategy.
Right. So we have American Express.
Okay, so Amex, another company that he's held for decades.
Yep, 30 years.
30 years. What is he seeing that maybe the rest of us aren't?
Well, American Express is interesting because it has a really unique position in the market.
Okay, how so?
It's not just a credit card company.
Right.
They've built their brand on customer service
Okay.
and this membership model.
Okay.
When you have an Amex card, it's like you belong to something.
Like a club.
Exactly. It's not just a piece of plastic.
That's a status symbol.
Yeah, absolutely.
Yeah. And I've heard that people who use Amex, they tend to spend more on average.
That's right. Yeah, they have a higher average spend compared to like Visa or MasterCard.
So is that part of what Buffett's thinking?
Oh, absolutely. I mean, that feeds into their earnings.
Right.
And they've been doing really well on that front.
Even with everything that's been going on?
Yeah, even with the,
the economy and stuff?
Yeah, the economic headwinds.
What do you mean by that?
Well, consumer spending has been a little weak lately.
Oh, right. Yeah, everyone's talking about a recession.
Exactly. People are being a bit more cautious.
Yeah, that makes sense.
So you'd think that would hurt a company like Amex, but
But they're doing okay.
they're doing more than okay.
Really?
We're actually projecting 25% growth in earnings for 2024.
25%?
Yeah.
That's impressive.
It's huge, especially when you consider like the bigger picture.
Yeah, like all the stuff we've been talking about.
Right, exactly.
So how are they doing that then?
Well, there are a few things.
Okay.
One is they've seen really strong growth in card fees.
Oh, so just from people having the card.
Yeah, basically just for having the card and using it.
Okay.
So that's a big chunk of revenue.
That makes sense.
And another thing is that their delinquency rates are really low.
Delinquency rates.
Yeah, basically it means that very few people are falling behind on their payments.
Oh.
So their customers are pretty financially healthy,
Yeah.
even with the economic pressure.
So that's a good sign.
Yeah, it bodes well for their future earnings.
So are there any other things that they're doing right?
Well, they're also adding new card members at a really good pace.
So even though the economy's maybe not doing great, they're still getting new customers.
Exactly. They're growing their customer base.
So they're doing something right,
Yeah, definitely.
but I'm guessing their stock price is pretty high now.
You're right. It's not cheap.
Yeah,
It's trading at about 20 times its future earnings.
which is high.
Yeah, it's higher than average for sure.
But Buffett's all about value, right?
He is, yeah. He's known for finding those undervalued companies.
So is this like a change for him?
Well, not necessarily.
Okay.
I mean, he does love a good bargain,
Yeah,
but he also knows that sometimes you have to pay a premium
right.
for a really great business.
Yeah.
And Amex is a great business.
Okay.
They have a strong brand,
Mm-hmm.
loyal customers,
Yeah.
and they've proven that they can handle tough times.
So he's looking past like the current craziness.
Exactly. He's thinking long term. And analysts are projecting long-term earnings growth of about 14% annually.
So he's willing to pay a little more now because he thinks it'll pay off later.
That's the idea.
Okay. So we've talked about Coke. We've talked about Amex.
Yeah.
What's the big takeaway here for regular people like me?
Well, I think there are a few things we can learn from this.
Really?
First, even Warren Buffett adapts.
Oh, okay.
You know, he's not afraid to make big changes when he needs to.
So we should be flexible too.
Exactly. You can't just stick with the same plan forever.
Right.
Sometimes you got to adjust.
And sometimes the best companies are the ones that everyone's overlooking,
Yeah, sometimes those steady, reliable companies are the best bet.
like Coke and Amex. They
Exactly.
just keep chugging along,
That's right.
even when everything else is going crazy.
Yeah, and I think the other big lesson is that Buffett is always thinking long term.
So don't get caught up in the day-to-day.
Exactly. Don't try to time the market.
Right.
Focus on the long game.
Find those good companies and hold on to them.
That's the key.
But we've only talked about 2 of his holdings.
Right. We've just scratched the surface.
Yeah, there's so much more to his portfolio.
Exactly.
So what else is he holding on to?
Yeah, what else is he buying?
Yeah, what's he increasing his stake in?
Right. What signals is he sending about other industries or even the whole economy?
Oh, that's a good point.
It's like a puzzle.
Yeah, it's like we're trying to read his mind.
Exact.
So to recap, even Warren Buffett changes his strategy sometimes.
Yeah.
The best investments might be the ones that everyone else is ignoring.
Right.
And the most important thing is to think long term.
Absolutely.
This has been great. I
Yeah.
feel like I've learned a lot.
Yeah. It's always fun to try to understand what Buffett's doing.
Yeah, it's like getting a peek behind the curtain.
Exactly.
It's like we're getting a sneak peek at his playbook.
Yeah. And maybe even figure out what he's going to do next.
And maybe even learn a thing or two for ourselves.
Right, exactly. You know, not everyone can be Warren Buffett,
No, definitely not.
but we can all learn from him.
Yeah, find our own way.
Exactly. Develop your own strategy.
That works for us.
That suits your goals
All right.
and your risk tolerance.
Yeah. So it's not about copying him exactly.
Right.
But it's about understanding like the bigger picture.
The thinking behind it. Yeah.
The long-term vision, the focus on quality.
Being willing to adapt.
Yeah, not being afraid to change.
Exactly.
I mean, they don't call him the Oracle of Omaha for nothing.
Okay.
though.
He's got a pretty amazing track record.
Yeah, and even though past performance doesn't guarantee future returns,
Of course.
there's still a lot we can learn from him,
Absolutely.
especially about how to deal with all the crazy stuff that happens in the market.
Yeah. It's
Yeah.
a wild ride out there.
Oh, I feel like I've learned so much today,
Me too.
and now I want to go look at his whole portfolio.
Right. There's so much more to explore.
Yeah, and see what else he's up to.
Yeah, it's like a treasure hunt.
Yeah, exactly.
Yeah.
You never know what you're going to find.
So we learned that even Warren Buffett changes his mind sometimes. Yeah, he's not afraid to shake things up.
That sometimes the best opportunities are the ones that everyone else is missing.
Right, those hidden gems.
And that we always got to be thinking long term.
Absolutely, that's the key.
This has been a great deep dive. Thanks so much for being here.
My pleasure. Always happy to talk about investing.
It's fascinating stuff.
It really is.
All right, well, that's all the time we have for today. Thanks for listening, everyone.
See you, guys.